Hi, this is Kerry Artek with Wicked Stocks, bringing you the weekly IWM report. That is the Russell 2000 ETF for the week of Monday, February 14th, 2022. Before we jump into the charts, I want to encourage you to please click like each and every time you watch the weekly IWM report or any Wicked Stocks material that you find on the Wicked Stocks YouTube channel. It helps us out a great deal when people search for the relevant material, in this case, Russell 2000, IWM analysis, so forth and so on. And subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. And that includes the weekly IWM report. Seeing it early, certainly before the opening bell on Monday, is to your advantage to use when it's relevant. And let's take a look at the charts here. I just want to kind of walk back a little bit and show you that 3-4 weeks ago we settled below the 217.67 rising channel bomb that set off a sell signal that did test long-term support at 192.67. That is still a significant zone of support. But I'm kind of making an exception here for the IWM because of the really tight consolidation that occurred at the high end of the all-time highs over the last year, and now we are well below it. That we could fall all the way in to the upper 170s, and I say that because when you violate consolidative frameworks, especially if they're drawn out like this one was, and I'm just using 207.21 as a rough number. It is sort of the early low when we pushed into this area about a year ago, or pushed up into that area about a year ago. The first pullback was 207.21. So I'm using 207.21 and 244.46 as the all-time high. I think that was in November, maybe December. And so if you just flip that to the downside, that same distance, it takes you to 169.96. And that is a pretty classic targeting mechanism for breaking out of congestive frameworks, whether it's to the upside or the downside. And there's a lot going on down there, which is one of the reasons I like it as a long-term support area. Now, I don't know if you can call it a target, but I just do think the market is susceptible to falling back into that zone, say between now and perhaps the end of March. The 170.08 is a 50% downside retracement. That 169.96 is that full congestive extension. And then the 173.39 is the high from 2018, which held for several years. So that area is perhaps in reach. We would need to close below the 192.67 formation at the end of a week for that to become a clear target. I just want to emphasize the fact that I think this market is susceptible to falling all the way back into that zone. Now, upside, 207.21, I mentioned this. It's not, I can't call it a symbolic level. It is a real level used for measurement purposes. But in terms of resistance, it is this descending channel top presently at 208.86 this week. And I also drew a horizontal line at 208.86 to show you how it is consistent with this low area. And so I'm going to say 208.86, able to contain buying into March trade, and below which this market can fall back again to 192.67 over the next few weeks, and as I say, possibly by the end of March into the upper 160s, low 170s, and that remains true below 208.86. But if we can close this week above 208.86, I think we have a good quarterly low. We should then continue up to that 238.76 channel top. That could be in as little as 3 to 5 weeks, but I honestly think it'll take the better part of 2 to 3 months because this market will then be pushing into this congestive area. There's a lot going on up there. Fibonacci retracements on the way up, so forth and so on. So I think if we close this week above 208.86, it probably wouldn't be until April, I'm guessing, before we could reach that 238.76 channel top, which is kind of our new midterm resistance, able to contain quarterly highs when tested, and if settled above, would indicate a good annual low, and we should then continue higher into later year. But until then, holding below 208.86, we can fall off into the lower 170s by the end of March and giving good respect on the way down to 192.67. So that 192.67 is a pretty solid level for swing traders. For those of you who are long-term investors, that could be the start of a range from 192.67, a 20-point range essentially, down to that 163, what is that, 173.39 high. So you could view it that way. If you're a longer-term investor, position holder, you can certainly consider that long-term channel top at 192.67 the start of a wide zone into the very upper 160s that could absorb selling not only through the year, but even perhaps through the balance of the decade itself. I think that pretty much summarizes it for this week's IWM. I appreciate you watching. Please click like if you haven't already and subscribe to the Wicked Stocks YouTube channel, and I'll be back next week for another weekly IWM report. Thanks for watching, and we will talk soon.